Good day, and thanks for joining us for the Purdue University CME Group Ag Economy Barometer survey results. I'm Jim Mintert, Director of the Purdue Center for Commercial Agriculture, and I'm going to share with you the December 2020 survey results. The Ag Economy Barometer rose to a reading of 174 from 167 a month earlier. The rise in the Ag Economy Barometer was primarily attributable to an improvement in the Current Conditions Index, which rose 15 points compared to November. The Index of Future Expectations also rose, but that increase was just 5 points compared to November. The Farm Capital Investment Index rose to a record high of 93 compared to a reading of 80 a month earlier, and of course that is dramatically higher than it was back in April. In a follow-up question asking farmers about their plans for farm machinery purchases in the upcoming year, farmers indicated that they were a bit more optimistic than they were earlier, especially when you compare the results to last spring. For example, in December, 15% of the farmers in our survey said they plan to increase their purchases of farm machinery in 2021, compared to just 4% that felt that way back in May. Farmers were markedly more optimistic about farmland values on the December survey than they were earlier this year. A record high 65% of the respondents in our survey said they expected to see higher farmland values 5 years from now. Farmers were more optimistic about cash rental rates on the December survey than they were earlier in the year. 18% of the farmers in the December survey said they expected cash rental rates in 2021 to rise compared to 2020, and just 5% of the farmers in our survey said they expected to see cash rental rates decline in 2021 versus 2020. That is markedly lower than what we saw back in August, when 17% of the farmers in the survey said they actually expected to see lower cash rental rates in 2021. We continue to ask farmers about the trade dispute with China, and we've asked them whether or not they think the trade dispute will ultimately be resolved in a way that benefits U.S. agriculture. There's been a change, especially since the beginning of 2020. In early 2020, roughly 80% of the farmers in our survey said they expected the trade dispute to be resolved in a way that was beneficial to U.S. agriculture. In the December survey, that was down all the way to just 47% that expect a beneficial outcome. We've been asking farmers a series of questions about policies affecting U.S. agriculture and their expectations for the next 5 years with respect to those policies. Compared to October, farmers in both November and December have been telling us that they expect to see more restrictive environmental regulations, higher estate taxes, higher income taxes, a weaker farm income safety net, and reduced support for the ethanol industry. That wraps up our survey results for the December Ag Economy Barometer. The full report is available on the Barometer website, purdue.edu/agbarometer. And you can also join us for our upcoming Corn and Soybean Outlook webinar. That'll be held on Wednesday, January 13 at 12:30 p.m. And more details about that webinar are available on our website, purdue.edu/commercialag. On behalf of the Center for Commercial Agriculture, I'm Jim Mintert. Thanks for joining us.